So let's see if we can get this going. Love it. Awesome, awesome, awesome. I hope everyone is having an amazing day out there in the ecosystem that is YouTube. If this is the first time we are meeting, my name is Edward Collins. I'm a lawyer. I specialize in tax, estate, and business law. And today we're going to be talking a lot about tax reduction. But before I jump in to all I want to cover, I'm curious where everyone may be tuning in from. So if you wouldn't mind in the chat, let me know. I'm going to try to pay attention to you guys as you're jumping in. It's definitely one of those interesting ecosystems trying to manage what's going on YouTube and basically presenting to you and being able to have an opportunity to say hello and get things done so that you get outcome. Because you're investing time to be here, and I just want to say thank you. Awesome. So when it comes to the opportunity to change your financial life for the better, one significant way of doing that is to start learning some of the rules of the game, right? And I've been an advocate for teaching individuals, high earners specifically, how to put themselves onto a path of generational wealth creation. That's why I spend so much of my time on social media teaching the real rules of money, how money really works, how business really functions, how the system is designed to keep you down. I'm not a fan of the government. If you've watched any of my content over the course of the past couple of years, you know that to be true. I'm very anti-government. I think the government itself is fundamentally corrupt. But don't get me wrong, I actually love America. I think America is the most amazing country in the world. It's the land of opportunity, after all. It's just that our system is fundamentally challenged. And if you do not take it upon yourself to learn the rules of the game, no matter what you do, it's really difficult to win. Right. So my objective is to help as many business owners, high-income W-2 professionals, real estate investors. My aim is to help you win so that you're outsmarting the IRS. And when you outsmart the IRS, that means they get less of your money, and I win because I hate those guys, right? So we are in this environment where we're able to work together toward that objective, and I'm looking forward to working with you in order to get there, right? In order to have that happen, I just want to share what's going to take place over the course of our time together. I'm going to talk about these concepts. I'm going to talk about the concept of tax reduction, what that's all about. I'm going to then share with you a case story and start to break down what I do in real life, right? Because I can talk about things and I can share information. But if you're anything like me, information is not what you're looking for. You're looking for transformation, right? You're looking for the stuff that you can start taking action on, and by doing so, get outcome, right? Because if you learn anything from what I share, learn this. Action is the only thing that leads to outcome. Action is the only thing that leads to outcome. So if you're tuning in, if you're just joining me here live, definitely in the chat, let me know where you're tuning in from. I'm curious to see where everyone is situated around the world. I'm here in South Florida. I'm currently in Boca Raton, Florida. I'm originally from New Jersey. I was born and raised in New Jersey, lived most of my adult life in New Jersey, relocated tax-wise here to South Florida back in October of 2020. We still own businesses and properties in New Jersey, so I do fly back and forth quite often. But my tax domicile is here in Florida, which, as you can understand, is a lot better than New Jersey from a tax ecosystem standpoint. But that brings us to why we're here today, right? So if you looked at any of the promotional material about what tonight's topic was going to be on, it's essentially understanding that the IRS is not your silent partner, right? That's a phrase that many have probably heard. The IRS is your silent partner. I fundamentally disagree with that statement because I don't think the IRS is your silent partner. I think they're a parasite. You see, when it comes to partnership, a partner will show up when you're bleeding. They'll come to the rescue. They'll come help. Like in challenging times, a business partner is going to put in some sweat equity, maybe even some capital in order to help you get through challenging times. But that's not the IRS. The IRS only shows up when you're feasting, not when you're in a state of famine, right? They're essentially that parasite that's willing to take from you when you're doing well, but completely unwilling to help when there's challenging times, right? That parasitic relationship is a frustration. And what I want to teach you today is I want to teach you how to fire the IRS legally, right? To undo this relationship that by default exists. And the system is dependent upon you not learning the rules, right? It's hoping that you don't pay attention to content like this. It's hoping that you don't start to take advantage of what the wealthy have been doing for millennia, right? There's actual rules to the game of money. There's rules to the game of wealth. And when you learn those rules, you can start to implement them. You can start to play the game from a position where you have the opportunity to win. Now, that's not a guarantee, right? You can learn the rules of the game, and that doesn't mean you're always going to win. But it is way better to be on the footing of actually understanding the rules of the game that you're playing rather than hoping for someone else to take care of you, right? Because that's what happens in our ecosystem. If you do not step up to the plate from a position of saying, hey, listen, I'm going to take responsibility, well, shame on you, right? Shame on you. You're the one who's going to be in that negative position long term, right? Because when you depend upon others always, it's very difficult to expand your position, especially beyond the person you're dependent upon, right? You could rise to the level of the ship you're currently dealing with, but it's hard to get to a bigger ship from the ship you're on, right? You have to be willing to expand beyond the help that may be available to learn the rules so that you can actually start to play to win for yourself. And that's my objective. I'm here to help you learn how to fire the IRS. But the question is, why should you even listen to me? Right? Why should you even listen to me? My name is Edward Collins. So if this is the first time we're meeting, I'm a lawyer. I specialize in tax, estate, and business law. But I'm also a serial entrepreneur. I've built and scaled multiple companies of my own. And I've helped countless, thousands of business owners across 18 different industries create financial freedom in their own life. So in the game of wealth, I am both a player and a coach, right? My very first company was a private wealth management firm that I still own today. I founded it back in 1998. So I predate Google, I predate YouTube. I've been doing this for a long time. And in that environment, I specialized in and still do, specialize in dealing with individuals of significant wealth, right? Individuals who have amassed significant wealth through high income and the actual proper capital allocation of that income during their lifetime, right? To amass what would otherwise, in most contexts, be called fortunes, right? And that's what I specialize in. I help individuals who have done really, really well master that wealth toward objectives that most desire. And within the context of what I teach, it's generational wealth creation, right? It's wealth that lasts multiple generations for the purpose of actually benefiting those multiple generations and a broader spectrum of things, causes, and entities that those who I serve care about, right? But in the course of building out that wealth management firm over multiple years, I came to realize that many of those individuals that I was serving were lacking in other areas of their financial life. They were getting counsel, but maybe that counsel wasn't great. And one of the specific areas that I noticed was in the area of tax. Specifically, individuals who were doing really, really well, how were they dealing with the tax consequences of that reality? And in most situations, they weren't. In most situations, they were relying upon an accountant to help. And unfortunately, the accountant wasn't positioned as a tax strategist. They were essentially just tax preparers, essentially glorified historians, spending all of their time, their effort, and their energy just trying to figure out how to best tell the IRS what already happened, right? Can you relate to that? Like, can you relate to those situations where you're trying to get counsel to take you to the next level, but the information that you're getting is like not really aimed at getting to the next level? It's basically just aimed at meeting the bare minimum so the IRS doesn't get mad. And I don't know about you, but if that's the type of accountant or tax professional you're relying upon, you have to start to question, are they actually working for you or are they working for the IRS? Well, it got me so frustrated that I actually decided to go out and create my own company, in addition to our wealth management firm, a tax preparation ecosystem that was aimed at preparing returns based on actual strategy, right? not just a passive relationship with the tax return. So I created the company in order to do that. But then I also recognized that individuals I was serving, mostly in the business owner space, right? They were having an add-on problem with not really understanding their numbers, right? Not just not preparing the returns correctly and getting adequate reclamation, if you will, of their own dollars, because they were able to retrieve that through actual tax strategy, but they were having a difficult time really understanding the capital allocation decisions that were happening. Right. So we recognized that there was a need for us to create another type of company to serve on the books front, right, to help them financially manage the business operations. Now, in the context of wealth, business is much more than just a brick and mortar type of ecosystem. Like real estate, when done correctly, is business. Contemplation of managing a family's finances could potentially be a business activity. So understanding the bookkeeping, financial planning, and analysis type of ecosystem was critically important for us as well. And then what we recognized is that beyond that, advanced financial planning analysis was also needed. And that's when we created this fractional CFO type of ecosystem. So when you look at wealth, we actually serve all dimensions of it for those that we serve, which gives me the context of being able to say, hey, listen, I can teach you how to fire the IRS legally, not based on just academics. Right, I'm academically trained in the languages of business and money, and I also have experience in real estate, our real estate portfolio, residential, commercial real estate. Right, within the context of everything, I'm definitely academically trained, but I've actually had practical experience putting it to life in my own life. Right, I put it to work in the real world, and I've been helping individuals of high income all across the country do that for nearly 3 decades. Nearly 3 decades. And what I want to talk about today is how can you take the concepts, the understanding of the rules of the game, and start to master the game to win. Master the game to win. And in the context of what I'm talking about, winning is the ability to hold on to more of every single dollar you make. It's the ability to hold on to more of every single dollar you make. But in order for us to do that, I need to make sure that we're on the same footing. Who is interested in learning how to fire the IRS? If so, drop fire in the chat. And if you're watching this on the replay, because we're currently live right now on YouTube, if you're watching this on replay, in the comments section, go down and drop the word fire. Let me know that you're absorbing this in real time and you're actually interacting with it. Because I've learned that when you interact with information, it gives you the ability to absorb it in a way that passive interaction just doesn't do, right? So I want you to be getting some amazing value from this experience. After all, you're investing your time here. And if you're watching this on replay and I'm on 2x speed, good luck trying to hear me, because sometimes I do talk a little bit too fast. But regardless, my goal and objective for you today is to learn how to fire the IRS. So if that's of interest to you, make sure you drop fire in the chat or in the comments section if you're watching this on replay. Because again, my goal and objective is to make sure that you're getting value from whatever investment you're making. And if you're investing your time, that's your most valuable commodity. So let's make sure we get an ROI on that. Well, how do we go about firing the IRS? Well, the first thing we need to understand is that the IRS is just one aspect of a challenge that we have to contend with. Right? There are multiple myths actually that hold us back, right? And even though we're in October and it's Halloween month, right? There are no tricks today. It's only tax reduction treats, all right? So that's my goal. I want to teach you the myths that we have to contend with if your goal and objective is to take advantage of real information that has been tried and true, tested in the trenches, and results in you keeping more of every single dollar you make. Right? That's the objective, right? So that's what we're going to go over. But in order to get through to you, I need you to first understand that there are things you may be believing. There's information that may be stuck in your head that will prevent you from hearing the truth, right? It's sort of like in magic. Like you watch a magician on stage, you start to believe things to be true just because of the way your brain is wired, right? You're looking at something, you're like, oh, that person, they disappeared, right? Because your brain is wired to say, someone was there, now they're not there, they must have disappeared. But in reality, you know that didn't happen, right? There's a trick behind it. There's some sort of thing that you're not seeing. But when your brain gets in the way, the information that's clouding your brain gets in the way, it's a challenge. It's a problem, right? So what I want to help you do is to get beyond these myths that are holding you back, And in order to understand what I'm talking about, we need to tackle them one at a time, right? The very first thing that we need to break into from a true understanding and awareness standpoint is this concept of my CPA handles that. My CPA handles that, right? Think about your own situation, your own context. Like, if you've been earning a significant sum of money, right? If you're a high income earner, it is likely, right? High probability here in the United States, if you're earning $250,000 or more each and every year, it is likely that in some way, some shape or form, you are dealing with some sort of financial professional that helps you on the tax front. Maybe that's an accountant. Maybe that's an EA, an enrolled agent. Maybe it's a CPA, right? Regardless, so many individuals, high income earners that I've met with over the course of multiple years, right, decades, have come to me and saying, well, Edward, I already have a CPA and they're handling that for me. But here's the reason why that's a myth. The vast majority of tax professionals are not strategists. They're just not. Like the vast majority of tax professionals, EAs, CPAs, right, accountants, the vast majority are glorified historians. They're compliance experts. Their goal and objective is to figure out what number goes into what box on what form so that the IRS doesn't get mad, right? That's compliance. Don't get me wrong. Absolutely required. Absolutely required. But the challenge with that is that compliance ecosystem creates sort of a contention, right? Between you as the client and the IRS as the regulatory body. And the tax professional is sitting in between the two of you. And the IRS knows that tax professional is eager to make sure the IRS is happy, right? That just is what it is. Why? Because most tax professionals are not just working for you. They're working for hundreds, if not thousands of other clients every single tax season. So they just don't have the time to sit down and go through the strategy aspect of it. Like that's just the truth of the matter. Think about your own situation, right? Think about your own tax professional that you may have in your own life. And think about how many other people that person has to meet with every tax season in order to help them get their tax returns filed, right? Tax preparation or compliance, that's what it's referred to as tax compliance, is a reactive process, meaning it's accounting for everything that already happened, right? Don't get me wrong, still necessary, right? There's major problems if you choose not to file your tax returns, right? But it's the filing of the tax returns is only one aspect of the tax problem. Tax strategy is what leads to outcome, right? Tax strategy is giving you the footsteps to take in your journey so that you keep more of your own dollars, right? That's not an accountant's job. The vast majority of CPAs do not do that. They just prepare the returns. And again, I understand why. And in fact, CPAs know why. Like if you think about the CPA exam in general, it's not aimed at tax strategy. It's aimed at compliance, like understanding the forms, understanding the rules and the regulations with regard to what happens within that reporting process to the IRS. So my CPA handles it is a myth we need to shatter. We need to bust that myth. Because in order to get steps of progress today in our time together, you need to come from the position that, yes, maybe you have someone who you've been working with up until now. But the reality is that may not be the person we can rely upon to get you to the result of keeping more of every dollar you make. Maybe they could definitely get to the result of you filing the returns on time, hopefully. Like I often have a lot of individuals that come into our ecosystem get frustrated with the people that they're working with because they can't even seem to manage that. And I get it. There's a lot of work to be done for the vast majority of traditional CPA practices. But when it comes to getting outcomes you desire, you want those outcomes. You want the result. And the result is keep more of every dollar you make. right? I talk around stage all the time. I speak around the country. I'm brought in by a variety of different businesses and organizations and groups, and they ask me to get on stage. And oftentimes I talk about money and how money works. And many individuals know that some of the companies I own, like a private wealth management firm, they understand that I'm involved intimately with the concept of money and wealth. So inevitably, I get asked almost at every event the same question: Edward, how can I make more money? Right? That's typically, I get off stage, someone approaches me with a question like that. And my answer is always the same: keep more of every dollar you're already making. Right? That's pivotal. That's a writer downer. Like, keep more of every dollar you're already making. And I know it sounds logical when I say it, but how much time, be honest, how much time do you actually invest in making sure you're doing that? How much time do you actually set aside to evaluate, are you doing everything you possibly can to hold on to more of every dollar you make? And if not, why not? Like, if not, why not? And again, I know one of the why nots is because you believe the CPA is already doing that for you. You believe your tax professional is already doing that. And I understand that, but we're shattering that. We're busting that myth together today. After this, you're not going to believe that anymore. You're going to know that that is not the case. Now, you may have a great relationship with whoever your tax professional is. I'm not saying get rid of it. That's not what I'm saying. I'm just saying understand what it actually is. What type of relationship? What is the goal and objective that person has? And what is their capability of actually accomplishing the goals and objectives you have? Keeping more of every single dollar you make. And if you are not absolutely certain that you're paying the absolute minimum that you're required to pay when it comes to taxes, well, the onus is on you to make a change, to do something different. Because the definition of insanity is doing the same thing over and over again and expecting a different result. And we are now in October, and the year is almost done. And if you are still doing the exact same thing that you were doing last year this time, how can you ever hope to get a different outcome than you got last year, right? That's what we're talking about. So let's bust the myth. The CPA has it handled. The CPA has it handled. Now, in addition to that, we also have to contest with the common retort that I get. Well, if I make more income, I'm just going to end up paying more taxes. So I'm going to settle where I am. And let me just tell you this. That is such a poor mentality to have, right? I'm going to not work harder to make more and keep more because it's just going to result in more taxes. And that myth holds so many back. I was having a conversation with a smaller group of business owners. So this is more on the business owner front, this conversation. And one of the people that was part of this group was arguing that they did not want to put in extra effort because they were just going to lose that money to taxes. And then we had to sit down. I had to just talk out loud based on what our tax system actually looks like here in the United States. We have what's called a graduated tax system. A graduated tax system. And what that means is that when we look at the concept of taxation, we have something called brackets, like brackets, so tax brackets, right? And when your income hits a certain level, the higher the percentage, right? But it's only for that portion of income, right? It's not for all of the dollars. So when you get to the highest tax bracket, which currently is 37% here in the United States, it's only 37% of the dollars above the base, the floor, right? We have a graduated tax system. It's not 37% on every dollar you make. It's only the dollars above where that bracket kicks in. And each year that changes, right? The top tax bracket, all brackets, if you will, they migrate over time just based on inflation, because most of the time we're dealing with something that is adjusted based on actual cost of living and inflation. But the concept is what it is, right? We have a graduated tax system. So working harder doesn't mean you lose out on more money. It just means that more of every dollar is taxed at a higher level if you don't have other strategies that you can employ to reduce the taxable income. We're going to talk about that in a moment, right? We're going to talk about that in a moment. I have the pleasure of being able to work with clients all across the country, as I mentioned before. Like we have both done for you services in the form of actual tax strategy and accounting related services, tax preparation services, but we also do consulting work, right? And from time to time, we host workshops on different topics. Like we have an upcoming workshop on tax reduction where we dive way deeper than what we're going to cover in this session. But the concepts are the same, right? The concepts are the same. It's understanding the rules of the game first and foremost. Once you have the rules in play, then we layer tactics and strategy, right? Techniques, right? It's my kids play tennis and they're going through tennis lessons, right? And the process is the same regardless of the game. You have to learn the rules first. Then once you understand the rules, then we can layer upon that techniques, tools, strategies, right, in order to win, right? But it starts with the rules first. It's really difficult to get onto a tennis court and play by the rules of basketball, right? Like if you're playing the wrong rules, you always lose, right? So we need to make sure that we're playing with the right rule sets. And part of the concept of understanding how to play the game the right way is we have to get rid of these myths that are blocking us in that journey. And myth number two, if I earn more, I'm just going to end up paying more taxes. So why even deal with it, right? And that's a problem, right? Because it's just a misunderstanding of how the tax code actually works. In a graduated tax ecosystem, it's only the dollars above the bracket floor that get exposed to that particular tax bracket. Your effective tax rate is lower, right? Because it's a blend of all of the different taxes you pay at the different brackets, right? So more income does not necessarily mean more taxes because high income earners, let me key you in on something. When you make more money, you can actually afford to hire better strategists. And those strategists help you implement strategy, right? It's not magic, it's just math, right? And that is part of the process, right? The better you do from an income standpoint, you can afford higher competent level individuals that can actually help you employ strategy that results in you keeping more of your dollars. So making more does not necessarily equal more taxes. It does if you don't do anything different, right? If nothing changes in what you're doing, then yeah, the outcome is going to be the same type of tax ecosystem that you're living in today, just at higher levels. But with the right strategy, you can hold on to more of every dollar you make. You can hold on to more of every dollar you make. And when it comes to understanding these myths, we also have to understand that we need to take our financial situation, our life, right? And we need to make sure that we understand that strategies are not just for the billionaires. I didn't come from money. Right? My family and I were like, I grew up poor, like poor in the United States. Historically speaking, globally speaking, way privileged. I get that, right? I'm not trying to discount anyone else's hardship. But my family and I, we had to work really hard just to get up to the poverty line here in the United States. I know what it feels like not having food because we couldn't afford it. I know what it feels like not being able to afford clothes. Like all of the clothes we had were hand-me-downs and like things that were given to us by community members that cared and gave back, right? Like that's the experience that I grew up in. So I was misguided about pretty much everything related to money as a child. Like all of the things I grew up learning about money were fundamentally flawed. And one of the things I learned is that the strategies, it's all like the system is designed only for the uber wealthy, the billionaire class. But what I want you to understand, because again, I've been doing this for nearly 3 decades. Strategies are applicable, the vast majority of them are applicable regardless of your income. They're just applicable to different degrees, right? It's the addition of or the subtraction of zeros in the context of what we're talking about. So the more you make, the strategies you employ, they just have a bigger impact. The less you make, The strategies still have an impact, it's just on a smaller scale, right? So when I talk about things with those that I serve, the strategies that I teach are universally applicable, regardless of the amount of money you make. It's just they impact you to different degrees based on your own set of facts and circumstances. Your own set of facts and circumstances, right? So when we're looking at the myth ecosystem, I need you to understand that regardless of what you believe to be true, a lot of people can benefit from understanding how taxes really work and how the system is really designed and how the tools and techniques that are legitimate, that are legal and ethical, how they can result in you keeping more of every dollar you make. Right? That's what I focus my time and attention on. That is what I leverage the decades of knowledge that I've personally enjoyed in order to help those that I serve. Now, it's important for you to understand how I do that, right? Because within the context of what I do, I teach generational wealth creation, right? That's the thing that sets me apart. Like if you look at the financial landscape of supposed financial gurus out there, I have an unfair advantage. I'm a lawyer that specializes in this stuff, right? I specialize in tax, estate, and business law. But I also own multiple companies in the financial space, right? So I have wealth management experience. I have tax practice experience. I have accounting experience. I have business management experience. Plus, we have residential and commercial real estate. So that overall context helps me to understand the interrelatedness of a variety of different aspects of a person's financial life. But what most people do, if they do anything at all, they typically go out and get a unidisciplinary professional to help give them guidance. Don't get me wrong, it's way better than not having any guidance at all. But to a hammer, everything looks like a nail. So if you're going to an asset protection attorney, as an example, you may end up with an amazing asset protection trust, maybe even an offshore trust, right? There's awesome tools out there that accomplish that objective. But it may not necessarily meld well with the other things that you're doing within your financial life and your personal life and your estate planning and your asset accumulation, right? All of the different aspects of your financial life need to be integrated toward your specific objective, right? It's not a one-size-fits-all concept. Now, in the context of generational wealth creation, we know, and this is, again, you don't have to take Edward Collins' word on this, right? Like, this is just tried and true knowledge. There are 4 pillars to making it possible for generational wealth to be created, right? 4 pillars, 4 things that need to be tackled in the right order and in the right degree that results in the outcome of you keeping more of every dollar. Pillar number 1 is you have to absolutely 100% keep more of every single dollar that's being made as it's being made, right? That's the reality of it. And that's probably the thing that brought you here in the first place, right? You were in some way enamored with this concept, the sexiness, if you will, of tax reduction. I get it. I'm right there with you. I hate the IRS, like with a passion, right? But that is just one pillar, right? We also have to understand how to protect those dollars, because if you're working really hard to keep more of every dollar that's being made, if it's under attack from outside forces, creditors, litigants, opportunists who want a piece of your pie, right? The have-nots want what the haves have. You have to protect those dollars, otherwise they're only one lawsuit away from being lost. And once you have every dollar, more of every dollar that's being made, kept, and protected, you want the infrastructure so that you can start putting those dollars to work, right? You need to multiply wealth. Not just make it, we need to multiply it. So you need the right infrastructure to make sure that every dollar gets a job, otherwise it becomes the employee of someone else, right? It's infrastructure that makes that possible. And then ultimately, you want to make sure that you're able and capable of passing those dollars on with intention to the people and the causes you care about. Because if you don't do that, the government decides. And I don't know about you guys, but I hate the government. I don't want them involved in my personal life whatsoever. And if you're anything like me, you probably want to say that at the top of your lungs most times, right? I get it. I get it. Now, when it comes down to this concept, I understand where the sexiness is. The sexiness is on the keeping more of every dollar. And I totally get it. So that's why we're going to focus on that today. In our time together, I'm going to share with you context and showcase to you how I help individuals do that. Now, I want you to understand, though, that is not all that's necessary. I just want to be transparent with you because I think it's important. You'll go out and you'll hear a lot of supposed tax professionals just talking about two-dimensional tax strategies. And I get it. I understand why, because most of the time it's sound bites. They don't necessarily understand the nuance of how do you actually apply a particular strategy in your own personal life. But it's the application of that information in the right way that actually is the thing that results in outcome, right? It's the application of that information in the right way that results in outcome. And unfortunately, so many supposed financial gurus just don't have depth of knowledge in the thing that's being talked about, so that they don't necessarily understand the ramifications of the decision, right? The ramifications of the decision. So as an example, a lot of individuals have been coming to me lately, and they've been talking about these strategies where they can invest in things, and in that investment, the promoter of the investment gives them a tax benefit greater than their investment. So they put $100,000 in, they're going to get $150,000 of tax benefit back, right? As an example. And that sounds super sexy. I totally get it. But if it sounds too good to be true, it often is. You have to understand the nuance of these types of strategies. Those types of strategies that allow for a leveraged tax benefit involve leverage, oftentimes in the form of actual loans. Like the promoter is borrowing money. They're using some of your capital plus borrowed dollars to do an X, Y, or Z activity. Maybe it's investing in heavy equipment. Maybe it's investing in some sort of solar farm or some type of activity that, but for your dollars and the borrowed dollars, they wouldn't be able to engage in activity, but they allow for you to get back a benefit beyond your initial investment. And the problem with that strategy is you can't necessarily get more than you actually put in, right? Not without consequences. And the consequence in that regard oftentimes is a potential for you to be on the hook if that company underperforms, right? If it does not perform to its objectives, and maybe that debt needs to be settled in a way that the company itself can't do, you're actually on the hook in those types of investments. You're at risk for that future potential drawback, if you will, of that investment. And the IRS has specific aspects of the tax code that make that so. Like the reason why you're able to get a benefit greater than your initial investment is because you're actually on the hook on the back end. So if things don't actually work out the way that they think it's going to work out, which in many situations it does not work out the way they think it's going to, you potentially are on the hook on the back end, either with coming up with additional capital or being on the hook for the liability that needs to be paid back. So you need to understand these things when engaging in certain strategy. And unfortunately, many of the promoters of strategies like that just don't have enough understanding of implications beyond the pretty sound bites that are in their sales material, right? And I get it. I understand, because individual salespeople are not necessarily strategists. They're taught to sell something so that they get compensated for that transaction. In many of those promoter type of circumstances, there's some sort of commission-oriented activity for the individual promoting it, right? They're paid some sort of commission for promoting that particular environment. Now, don't get me wrong, there are definitely good types of investments out there that follow that type of structure, but there are also many bad ones, right? And the reason I'm sharing this the way I am is because I want you to be informed. I want you to be informed. Going into the world that is tax is a complicated one. And if you're not working with strategists that actually have depth of understanding beyond the pretty sound bites of a piece of sales promotional material, well, then sometimes you have to understand that you get what you pay for. Right? You get what you pay for. And the ramifications of certain decisions you need to know that anytime you sign your tax return, you're the one on the hook, no matter what anyone else told you, right? Like you can't rely on your CPA and blame your CPA for information, or your other tax professional, or the promoter for that regard. Like you can't blame those individuals, not in tax court. Tax court doesn't care. You sign the return, you're on the hook. So you want to make sure that you're implementing strategy that gets you the outcome that you desire, but in a way that you can live with, that you're comfortable with the risk that you're taking with regard to the particular strategy you're engaging in, right? And I share that within the context of the pillars of generational wealth creation, because keeping more of every dollar is a pivotal primary component to generational wealth creation. But we want to do so safely, right? We want to do so with measured risk, with risk that we are tolerant to take, right? We have the capability of absorbing certain types of risk. There's other reasons why certain strategies are problematic, things like depreciation recapture that we have to contend with, potentially not allowing for a particular deduction to be applicable towards our non-passive income, because maybe there's a passive activity loss rule that comes into play. All right, like understanding the nuance of the code goes well beyond just the soundbite of fancy promotional material from a sales perspective. So I'm sharing that with you because I want you to be better for having watched and invested time together in this particular content, right? I want you to be better for having been here. That's my primary objective. And I often will go against those individuals that promote things in ways that are just not, one, I don't think ethical, and two, definitely not legal, right? Like I want you to keep more of every dollar you make, but I want you to do so ethically and legally, right? To stay out of the crosshairs of the IRS so that you can sleep at night, right? So that's why I definitely go against all of the ridiculousness that's on social media these days with like some of the stupid, some of the stuff that comes out, because you guys don't know this. I don't actually see those. Like if you've seen any of our short form videos on Instagram or Facebook or TikTok, you may not know this, but I don't see those videos before we film them, right? Like my team gets them submitted by the community. We don't even source them. The community sends them to us. My team puts them onto a phone, the ones that most people send. Like if one video, we get 50 people sending it to us, that one goes on there. If 100 people send us another video, that one goes on there. And the team will hit record and I will hit play, and they record me watching it for the first time. There's no scripting. I literally watch it. You see my face doing silly things sometimes because I'm watching it in real time. And then I just put the phone down and I talk and I share what I know to be true after 3 decades of actually doing this work, like working with truly high net worth individuals that are high income earners, that actually leverage strategies. And we've invested thousands upon thousands of dollars of research to make sure that the strategies work, right? Like it's real dollars invested to ensure that they are tested in the trenches so that you can rely upon them. That's the difference maker. Again, I have an unfair advantage, very much an unfair advantage, but I'm an unapologetic capitalist and I earned it, right? I earned that advantage. Now, in the context of what we're talking about tonight, I want you to understand that all of the challenges that I've been talking about, the concepts of the enemies at the gate, the creditors, the litigants, the opportunists, Uncle Sam, right, the IRS, all of those challenges in your journey of wealth creation, there is a solution. There is a solution. I refer to it as the blueprint, right? The actual up-level by design blueprint. And it is the infrastructure that allows for you to actually accomplish the pillars, right? It gives you the context to be able to have the right structure so you can layer tax strategy, resulting in you keeping more of every dollar you make. It's the right structure to ensure that we have asset protection capability, right? It's the right structure that allows you to put your dollars to work in the right way to multiply wealth. It's the right structure that allows you to contextually pass on what you've worked so hard to build to the people and the causes you care about. That is what the Up-Level by Design Blueprint is all about. It is a framework. Now, what you're seeing on the screen is the framework itself. We leverage things like trusts and holding companies and operating companies, family management companies and special purpose entities. We leverage them in the right way, but this is a framework and it must be fine-tuned based on your own personal facts and circumstances, right? It's not a one-size-fits-all solution. It's a framework. And that framework, when applied, gives us the ability to start leveraging tax strategy. And think about it, like if you don't fix this, if you don't fix what's going on in your life, 12 months from now, you're going to look back and you're going to be like, man, that was stupid, right? Because if you're earning $500,000 a year and you're in that 40% plus erosion ecosystem where the IRS is stepping in, your state taxing authority is stepping in, and they're just siphoning, they're stealing that wealth from you, that ability for you to generate and create money each and every year. If they're taking 40% of that away, that's $200,000 a year that's going to a taxing authority, right? Over the next decade, that's $2 million invested with the tax authority. I don't know about you, but I think that's stupid. Like, what return on investment do you get for that? Like, think about that. What return on investment do you get for year in and year out not figuring out the rules of the game, right? That $2 million doesn't come back to you, right? That's lost. That's opportunity cost. How could you use that $2 million in other ways to benefit not just yourself, but your family, your constituents, your employees, your customers, the communities and the causes you care about? How can that have been put better to work? I definitely think it could be done better if it was in your hands rather than anyone in DC. I don't like those guys. It's like ridiculous. So I want you to understand that it's not about just making more money, because that typically is the response. Again, we talked about this earlier. Most people say, okay, taxes are this erosion. I can't do anything about it because my CPA has it handled, or I'm in a situation where if I make more money, I'm simply going to be taxed on it, so I'm not going to try it. Or the strategies I hear about, they don't apply to me because it only applies to billionaires. So I'm just going to go out and make more money and deal with the consequences. And the problem with that is not a solution, because more money does not equal real wealth because of the erosion, the holes in the bucket, the leaks that exist. The solution is figuring out the right structure and applying the strategies that result in you keeping more of every dollar, right? That's the solution. We have to contend with the enemies at the gate. We have to contend with the IRS, the creditors, the litigants, the opportunists. And today we're talking specifically about the IRS, right? We're talking about this theft that occurs, right? And again, even that I think is contentious, right? Because at the end of the day, I don't call the IRS thieves. I call them like extortionists. They have guns, right? And there's consequences to not giving them their quote unquote fair share. Now, don't get me wrong. There is a purpose for government as well. Like I'm not an anarchist, right? That's not my bent either. Like I believe that there's a role for government. I just think it should be limited. Like protect the sovereignty of the country, protect property rights, protect our lives, right? Beyond that, let's get all of that activity a little bit closer to the people so we can at least see what they're spending our dollars on, right? It's really hard to see it when the black box is the government and they can't even figure out rounding errors that are lower than, I don't know, 8-9 figures. Like it's just ridiculous that, I'm going on a little bit of a diatribe here, but I hope you at least get a sense of the passion that I have for this, because there is a solution, right? The infrastructure is there that can help you. But if you don't find that infrastructure, you're going to constantly be battling these money leaks. You're going to be battling the erosion that's taking place year after year after year. Real opportunity cost. Because we're not talking about little dollars here. If you're on this session, you're a high income earner, which means you know the pain of writing stupid checks to the IRS every year. Now compound that pain over a decade. That's real money that you could be transforming not just your life, but generations to come. Like you could solve the problems of your bloodline here with this, right? Like that's what I'm talking about. That's what we talk about in the context of generational wealth creation. And the solution is simple. We take the blueprint and we apply it. We apply it to an individual's life. And I'm going to walk you through an actual case study right here, this case story type of ecosystem. we're hosting an actual workshop on tax reduction. I'm going to go way more in depth in this and some other case stories on that particular session. But I wanted to at least showcase what it is that we do, right? Because it's important for you to understand like the ramifications of understanding the structure and strategy and how to apply it. Like it actually results in some pretty darn amazing things, right? And this is Chase's situation. Chase is what I refer to as a solopreneur plus. Now the reason for that is like truly a solopreneur owns his own creative agency. And just had a VA. When I met him originally, this was back in the beginning of 2023, only had one VA at the time. Still has a couple VAs now, but still a solopreneur, right? Just plus, right? Lives in Oregon, single when I met him. I don't know. Like, I don't think he's ready yet to settle down. He's in a committed relationship though, not fianced yet, at least not that I know of. So we'll see what comes of it over the course of the coming holiday season. Things happen over the holidays. It just is what it is. But in the reality of Chase's scenario, Chase is doing rather well. Like from a financial perspective, doing about $261,000 a year, had tax liability when I met him, a little over $87,000. And what I noticed in Chase's situation is that everything that was happening in a sole proprietorship type of ecosystem, like filing all of his income on a Schedule C, exposing it all to self-employment tax, no real legal entity structure. And that's actually pretty interesting to note, right? Like when you think about the United States right now, there are about 33 million small businesses in the United States. 33 million small businesses. And the vast majority have no legal infrastructure. So no LLCs, no anything, right? They are sole proprietorships. They're organized in such a way that they are unorganized, right? They exist without formal infrastructure in play. And that is not necessarily a bad thing because the vast majority of businesses don't last, right? Only about 50% of businesses survive over the course of 2 to 5 years. And 2/3 of all businesses that are ever formed fail within 10 years, right? So the vast majority of businesses aren't really long in tenure and in lifespan. So I understand why many of them don't go through the formal structure, but it's sort of like a chicken and the egg type of scenario. Like those individuals that actually put in time, effort, and energy to want to form and formalize their structure and their ecosystem, they tend to attack a lot of things in better ways, right? And that's sort of what I'm trying to hit home for you today. But when I'm looking at Chase's scenario, Chase had no legal infrastructure when we met, right? And that actually did have ramifications on Chase's situation, right? To the tune of $87,000 worth of tax liability that Chase was writing stupid checks year after year because income was pretty steady. It was consistent in that 250 to 270 range for multiple years, right? So consistently doing rather well. Again, the average income is way lower than that in the United States. So substantially well compared to the average. But if you're watching this, maybe not so substantial to you, right? Totally get it. But don't get hung up on the number of commas in the income because everything I share with you, again, is applicable just to different degrees. If you're making more, what I'm about to share with you is more applicable. If you're making less, what I'm sharing with you is still applicable just to a lesser degree. But the concept I want you to understand is we came in and we changed Chase's life because we were able to restructure what was going on in Chase's scenario in such a way that actually resulted in outcomes that most will never get because they just don't know how to do it. Right? We were able to adjust his taxable income down to $147,000, which meant his federal tax liability dropped down to $38,000, which was a $48,400 tax savings. Now, I'm not going to let you pass over this. Right? I need you to understand. Before up level, $87,000 tax liability. After up level, only $38,000. That was a $48,400 tax savings. I'm not talking about tax deduction. I'm talking about in-the-pocket savings because we implemented structure and strategy and then layered techniques and and operations on top of it, right? Structure and strategy, though, made this possible. And you may be saying, well, Edward, and I get it. The logical question you should be asking yourself right now is, Edward, what did you do? Well, this is a screenshot moment here, guys. We did a lot. We did a lot. In Chase's situation, it wasn't just like an overnight thing. And again, this is the difference maker that a lot of individuals like sort of lose on, right? Like you go out into the ecosystem that is social media when it comes to the context, if you will, of tax reduction, and it's single overnight strategies that people talk about. Oh, I'll get you tax savings. We're in October. I can reduce your tax burden down to 0 by the end of the year. Yeah, highly improbable. Highly improbable. Like I want probabilities here, right? I want probabilistic outcome because that's what you and I care about. I don't care about what's possible. I care about what's probable in my life. I care about what I can actually put into work so that I get the outcome. Everything else is just like sugar. Don't get me wrong, sugar tastes nice, but the crash after you eat a lot of it is not necessarily fun to go through. So I want you to understand that the context of what we did in Chase's scenario was deep. There was a lot of things that happened, and it didn't happen overnight. It happened over the course of working together for a year, right? We implemented strategies that actually resulted in pretty amazing outcome. And I want to focus your attention just on one aspect of what we did. One aspect of what we did. We restructured Chase's life, his business operations. And again, this is applicable across the board. Maybe you're a high-income W-2 earner. Maybe you're a real estate investor. We can leverage strategies like this in different ways, right? We can create side hustles. We can leverage business assets and separate things like property management from actual rental real estate ownership, right? There's ways we can leverage strategies to get outcomes like this. So again, applicable just to different degrees for different people in different scenarios. Facts and circumstances are always the thing that rule what we do, right? Facts and circumstances. But sometimes we're able to change our facts and circumstances in order to make things happen, right? And that's where context and strategy get married together in order to help you get outcome. And that's the difference maker when you work with someone who actually understands what they're doing across multiple disciplines, not a unidisciplinarian. But in the context of what we did for Chase is we actually restructured business operations to create an S corporation opportunity, right? We put formal structure in the form of LLCs. We put holding companies in. We structured them in a certain state in order to get some asset protection capability there. We leveraged an S corporation at that ecosystem. We had operating company below it, funneling all the income up to the holding company from a management fee perspective. That, what I just talked about, is not a tax strategy, right? That's a layering strategy for asset protection. Anyone who tells you otherwise is lying to you because what I just shared doesn't reduce taxes, except for the S corporation, right? The S corporation gives us this legal fiction where you're both an employee and an employer at the same time. And in that legal fiction scenario, we're able to divide how we get paid from our company. And a portion of our payment is in the form of a reasonable salary, which still gets hit with this dreaded F word in taxation. What the FICA, right? The Social Security and the Medicare tax, that 15.3% that just erodes our dollars when we first make them, right? When you think about the context here, right? If you make $100,000 of taxable income, the first $15,300, if you're a business owner, is eroded in self-employment tax, right? It's 15.3%. Social Security at 12.4%. Medicare at 2.9%. If you're a high income earner and you actually have a lot of assets, you may get hit with the surcharge, that 3.8% Obamacare Medicare surcharge. If you have a lot of assets and you're investing, like you're a high income earner with a lot of portfolio wealth, right? These are just the realities of the scenarios that we deal with inside of UpLevel. Like I walk into situations like this, and this stupid tax here, the vast majority of people who are paying it because they just don't have the right structure in play so that they can layer a strategy that results in them keeping more of every dollar they make, right? But this legal ecosystem, how do you do it, right? Like there's a variety of things that can take place, right? When you form a holding company, as an example, let's actually break this down, because I wanted to make sure that in our time together, you actually get benefit, right? So we have an entire ecosystem where we put trusts in play, we put holding companies in play, we put operating companies in play, right? Again, it's way more complicated than what I'm drawing out here, but I'm sharing it with you to give you just a little bit of context, right? A little bit of context. With regard to the holding company, in the vast majority of circumstances, it's going to be a Wyoming LLC. So Wyoming LLC. And as you can tell, I did not do great in art in school. My handwriting, my penmanship, my artistic capabilities are just not there. But I think you get what I'm talking about, right? I think you get what I'm sharing. The Wyoming LLC, we select that not for tax reasons, because even though Wyoming is an income and corporate tax-free type of state, that's not why we're doing it, because you're going to be income taxed where you reside regardless. We're doing it for an asset protection reason, an asset protection motive. But within that LLC, we are oftentimes going to elect S corporation treatment. And typically we're going to do that when your income, we're going to start to consider it at least, when your income exceeds 50K and gets into that 100K range, right? Now, again, it's a sliding scale a bit, but the concept is if you're in that 50K to 100K range, it starts to make sense to consider an S corporation election. And when an S corporation makes sense for you, it creates this legal fiction. Now, how do you do that? Well, you form the LLC first, right? And you form that in Wyoming. You can go to the Wyoming Secretary of State's website, and you could form a Wyoming LLC. When you form that LLC, you can elect S corporation treatment with that LLC by filing a form, a simple form, depending on where you are, whether you're filing this form after you form the entity or before you form the entity. It's one piece of paper, essentially, 2 pages, right, front and back, that gives you the capability of telling the IRS, I am owning and operating a limited liability company, but I want you to tax me under subchapter S of the tax code, right? That's why it's referred to as S corporation. So it's subchapter S of the corporate tax code, and it gives us a treatment in that it allows us to essentially funnel the income to ourselves personally. So it's a pass-through tax entity, but we get to divide our income between what is referred to as reasonable salary and owner's draw. Right? Reasonable salary and owner's draw. And depending, again, my penmanship is horrible here, guys, but depending on strategy, you get to determine what that allocation is going to be. And again, let's use the context of $100,000 of taxable income, right? In this scenario, right? Oh man, that is so horrible, guys. You guys just let me write and draw, and it's just horrific. Let me try to make this a little clearer. $100,000 of taxable income, right? So let's assume for the moment, because we talked about this before, if you just had $100,000 of taxable income, that's $15,300 of self-employment tax, right? Right off the top, and then whatever's left over gets hit with income taxation. But let's assume you just did 50-50, and you said of that $100,000, you're going to take a reasonable salary of 50K and an owner's draw of another 50K. You just divide it 50-50, right? And if that were the case, well, then only the reasonable salary gets hit with self-employment tax, or $7,650, not $15,300. That's a $7,650 tax savings just by having an S corporation in the mix, right? So that's one of the aspects of what we did for Chase. We created an entity and made it possible for Chase to keep more of every dollar that's being made, because you got to avoid some of those dollars getting exposed to self-employment tax. Right? That's real outcome. And you guys could do that, whether you work with a company like mine, or you want to go out into the world and do that on your own, or hire another professional to help you get that outcome. It's just the establishment of an S corporation. But don't stop there, because we didn't stop there with Chase. We formed the S corporation so that we could take advantage of another tax strategy called an accountable plan. This is an employee reimbursement plan. Remember I said the S corporation is this legal fiction where you are both an employee and an employer of your company at the same time. So in an employee reimbursement plan, the employer, you, get a tax deduction for the reimbursements made to the employee, again, you, for the business use of the employee's stuff. And the most common one is the home office, right? So we're able to create, in Chase's circumstance, an additional $9,800 of deductions based on reimbursements that the company got. And Chase got to keep that money personally, as the employee, tax-free, because it was a non-taxable fringe benefit to himself. Then we leveraged the Augusta rule, which is the ability to rent your primary residence to any third party, and by doing so, create the opportunity for the third party to take a rent expense, but you get to keep that money tax-free. And in 2023, we did $17,500 of tax-free income because we went out and we leveraged PeerSpace, which is a online website that gives you the commercial rates for renting a house. Let's say you want to do a photo shoot in a house or hold a company retreat at a house. Like, we're not talking Airbnb rates, we're talking about commercial use of that property. So we use a commercial equivalent, PeerSpace. Then we went out and we leveraged some local hotel rates and convention center rates and just got quotes and used a couple of those quotes to determine what the average rental rate should be. And then we created a rental agreement between Chase personally and Chase's company. So the company had a rent expense, a legitimate tax deduction, and Chase got to keep $17,500 tax-free in 2023. Boom. That's strategy. If this is like ringing a bell with you, like, let me know in the chat. If this is blowing your mind, drop up level. And if you're watching this on replay, because we're live right now, but if you're watching this on replay, drop up level if this is something that's resonating with you. This is real strategy, guys, that results in real outcome. Real strategy that results in real outcome. And it all starts with having the right infrastructure in play. That's why I get in so many arguments with the supposed financial gurus that are just talking about tactics. It's nice, but if you don't have the right infrastructure, it doesn't matter what tactics you talk about, you can't implement them. Right? That's why I share what I share. Right? I want you to get the outcome that most will never get, but the only way to do that is to do the things that most will never do. Right? That's just the reality of what we talk about here at Upload. Now, like, if this resonates with you, this is just like the tip of the iceberg. We're hosting an upcoming workshop on tax reduction where we're going way more in depth in this. Right? We're talking about a variety of other case story scenarios. We're talking about high-income W-2 professionals in that environment. We're talking about business owners, multiple serial entrepreneur situations. We're going in depth because, again, I want you guys to get outcome. Right? That's why I host these types of workshops, so that you can step up your understanding of what actually rings true from a tax reduction standpoint. What rings true when it comes to asset protection? What rings true when it comes to wealth multiplication? What rings true when it comes to intentional legacy? Right? The 4 pillars of generational wealth. That's what I help individuals create. If you're a high income earner, that's what I focus on, right? The creation of generational wealth. The creation of generational wealth. Now, when it comes to the context of how do we get there? Well, there's a very specific way we do it. And we do it by design. Like, I am not of the opinion that this happens by accident. It has to happen by design. Uplevel by Design is our entire ecosystem of integration of all of the different aspects of what we do and how we do it, right? And we have a variety of ways that happens. Like, it happens in the context of actual events and community organizations. We provide mentorship and systems and techniques and tools and tech and accountability, like, all aimed at helping generational wealth creation. And it's not right for everyone, but for the select few, it could actually change your life. And not just your life, it could change your bloodline, right? The outcome for your entire bloodline. Now, if you're interested in really diving deeper into the playbook, like some of the stuff that I talked about in this particular session, you're not going to want to miss the upcoming workshop. The workshop itself is on tax reduction. All you have to do is click the link in order to join. I know my team is going to drop the link in the chat. If you're interested in jumping in, if you're watching this on replay, it'll probably be in the description below or in one of the comments below. Just make sure you lock up your seat, right? Because the one thing I know to be true is if you're anything like me, you recognize that the only way to get outcome is to take action. Action takers are the ones that get the outcome, guys. It's the ones that sit on the sidelines wondering like, oh my goodness, it's already April again. I didn't do anything different. I'm writing another stupid check to the IRS. Like, I don't want that for you because I hate the government. I don't want them to get a single penny more than they absolutely have to. And if I can teach you the truth about money, the truth about the game of wealth, like all the rules, you can start playing those games to win. You can start playing with the intention of getting outcomes that most will never get. If this has been in any way helpful for you, I'm happy that you had the opportunity to invest some time. If you watch this on replay, hopefully you weren't watching it on 2x speed because I'm sure that must have sounded very interesting, I'm sure. But either way, I hope you got value. And if so, if you're not following this channel yet, be sure to subscribe, hit that like button, hit the notification bell so that you get notified when new content like this drops, when new live sessions get posted. This way you can attend. Because again, the only way you get outcomes is start doing the things that you're not doing right now so that you get different results, right? If you want something like different than what you already have right now, you know the only way to do that is to do something differently. And if our channel is the thing that helps you get that different outcome, I'm so happy to be here to be able to provide that to you. Regardless, be sure to join the upcoming workshop on tax reduction. Click the link and I will see you there. Till next time, be well. Bye for now.